it's Brian Shannon from AlphaTrends.net. Today's Friday, the 25th of November. Hope you had a good Thanksgiving and shortened day today, obviously. We had a great week for the market. The S&P 500 all-time high, NASDAQ right up there, the Russell 2000 at highs, and the bull market continues in the semiconductors. The biotechs, that is, pull back slightly, but we'll take a look at that in a moment. And bonds may be starting to stabilize, but still clearly broken group. So let's look at the action. We'll start with the daily time frame, and of course, the S&P 500 has had this magnificent run since the election and faked a lot of people out with that move prior down to the election, down that is, and here we are again at all-time highs with a rising 10, 20, 50, 100, 150, 200-day moving average. If that's not a bull market, I don't know what is. The intermediate term trend continues to be innocent until proven guilty as well as it rises above this rising 5-day moving average. It is just foolish to sell a market short when the market has a rising 5-day moving average. You can look at it and say it's up too much or whatever you want to say, but the fact is we still see higher highs and higher lows, and today once again we broke to an all-time high and held on to those gains. So for next week, I think our first important level of support that we want to see hold will be down at 219. If you're a very aggressive trader, maybe you can find some shorts down to that level, but I certainly wouldn't suggest it, and it's not the easiest way to make money in the market to sell short an uptrend. So as long as we still see that rising 5-day moving average, we're innocent until proven guilty, and if we break down below it, then we get a little bit more cautious. It doesn't make us turn bearish. The NASDAQ is banging up against this little band of resistance that we had seen earlier this quarter, in the fourth quarter that is, and actually, that's the third quarter. But anyways, we're banging up against that, and it continues to show signs of improvement as it does that. Now, the bigger picture, we're still really in this bigger trend here for the NASDAQ and bumping up against the top end of that prior resistance. But it's within a primary uptrend with a rising 10, 20, 30, 40-week moving average. So it would not come as a surprise to see this market break out to new highs here before the end of the year. And what we're going to be looking for next week is our first important level of support that we want to see hold is in this 118 area. As long as we hold above that, we remain innocent until proven guilty. Breaking below it would give us a little bit of caution, but not turn us bearish. The Russell 2000, as I've been saying, has been very similar in its action to the semiconductors were all summer. That is that it just continues to rise day after day. You know, someone asked me today, is it a good time to buy the Russell 2000? Personally, I think not. You have to ask, where has it come from? 115 to 134. It's just rallied 19 points, greater than 10% uninterrupted. I think, though, that you look at this market, and if you're going to buy it up here, you have to have very tight stops, because the more we rise like this, the greater the likelihood that we will have some kind of setback. Although, as we said, similar to the semiconductors, it might be just a consolidation through time. So we look at this all-time highs in the Russell 2000, and you can't be bearish a market that's making higher highs and higher lows. What we're going to want to see is that we continue to rise above this rising 5-day moving average. If you're not familiar with the 5-day moving average the way I'm speaking about it on this time frame, that is a 15-minute time frame, you can see the time frame right up here, 130 periods. Please Google 5-day moving average alpha trends, and there's enough descriptive information out there to teach you that. But again, we're higher highs and higher lows. There's just no reason to sell short. The semiconductors, as I've mentioned to subscribers and in this video last week, you know, it broke the high end of this recent band of what we were talking about here was this consolidation with a rising 50-day moving average is more likely to break in the direction of the primary trend, which of course was higher. And I've been talking about this market bullishly since it broke out right here, and this is how we've been raising our stops. So a current stop for someone who purchased over here near this 69 level would be just at about 70 and 71-ish. But again, you know, make the trade your own, whatever your time frame is. I'm talking talking simply about a swing trade there, and we're seeing higher highs and higher lows above that rising 5-day moving average. Just again, as we saw this summer, this action that we're seeing in here is very similar to what we're seeing in the Russell 2000. So maybe the Russell 2000, when it starts to correct, will look something like this, suck in a lot of short sellers, and then see another rally higher. The primary trend is higher. It's foolish to try to sell short for anything more than very aggressive traders. The biotechs had a little bit of a shakeout on Wednesday, and they recovered very nicely because they had gotten below that 50-day moving average, came down to the 20. I still think that this group is constructive. When you look at the weekly time frame, we had a beautiful stage 2 uptrend through 14 and 15, some distribution in late 15, and then it's been a decline, lower highs and lower lows. And if they don't scare you out, they'll typically wear you out. But now we're starting to see that this market is above a rising 50, 100, 150, and 200-day moving average. We've got this band of resistance overhead that I think is likely to be tested in the near term near 300. And if it can break through there, this would be a very important higher low. And I think it could be something that could even be invested in. That is, we get a breakout. This will be an important higher low with a investor's stop somewhere underneath this higher low. That's how important this level is right now, especially given that we saw the shakeout in there. Now let's take a look at a 30-minute time frame, and you can see that we still have this pattern in here of the lower highs and lower lows and the declining 5-day moving average. So it's not time to purchase yet, but given that recovery and the fact that looking at a 15-minute time frame now, what we're going to be looking for in here would be something more along the lines of next week, maybe it rallies up towards that 290-ish level, pulls back, makes a higher low. We see that 5-day moving average rally up like this. This would be the place to purchase the biotechs with a worst case stop under here, and if you're more aggressive, perhaps under there. But I would say definitely keep your eye on this group next week. If it can do, what I just said there is rally up towards this little important band of what's been support and resistance here recently. So if it can get up to this prior support, which has become resistance, then and back off, then breaking through that, I think you've got a very easy, quick shot to 300, and it's likely to pause there. Doesn't mean it has to. I certainly, wouldn't sell short, but it's likely to pause there, rebuild some energy, and then we could have this stage 2 uptrend on the weekly time frame. Again, that's how important it is. The TLT, the 20-year average blended treasuries, continues to just get smashed since the election here. We, maybe starting to try to stabilize a little bit in the intermediate term because we see this 5-day moving average starting to flatten out. But in order for it to get more neutral in the intermediate term, it's got to get above the 5-day moving average, and then perhaps for a bounce up above this level. But the downtrend is still clearly in place here on the daily and the weekly time frames. It's getting overdone, you could say, but that's not a reason to buy. Shares of Apple starting to stabilize a little bit in here. That's good to see, but it's only one stock. There's a lot of other better setups out there for subscribers. We've got a lot of them for Monday in our webinar on Monday. I'm going to keep this brief though, as it is a holiday here. So have a good day. Thanks for tuning in, and I'll talk to you next week.